There's one setup I've traded more than any other in the last 6 years. It's not a pattern, it's not an indicator, it's a 1 hour window. And according to a 10-year study of nearly 3000 NQ and ES sessions, it gives you a tradable signal 96% of the time. And on the right kind of day, 98.7% baby. And today I'm going to show you exactly what it is, why it works, and the rules I use to trade it, including the one filter that separates a statistic from an actual edge. So stay until the end of this video because I'm going to show you the one type of day where this setup eats traders alive and how to spot it before you even enter. So if you are ready, let's break into it. So to begin, what is it? Is initial balance, because before to go deeper in it, it's better to figuring out what is it exactly. So the initial balance is just the high and low of the first hour of the US cash session. So from 9:30 a.m. to 10:30 a.m. Eastern time on NQ or on ES. Okay, ES is the S&P 500 on futures market. This concept was pioneered by Peter Steidelmeier, if I pronounced it correctly, as part of market profile theory in the 1980s. It's not new, it's just mostly forgotten by retail traders. Why is that specific hour? The opening auction plus 30 minutes of discovery sets the fair value envelope for the session. Institutions establish their opening positions in that window, and that's why it's working so well. So that's it. Two lines, the high and the low of the first hour. But what happens around those two lines is where the edge lives. I didn't invent this, I just rediscovered it. And I want to show you the numbers myself so you don't have to take my word for any of it. So this primary source is tradingstats.net. 2,833 days NQ sessions from January 2015 through December 2025. Every regular trading hours session on NQ for 10 years, guys. Just do you imagine this study? And on ES, 2,683 days of ES trading session. So the baseline, 97.8% of ES days and 96.2% of NQ days see at least one IB breakout. Guys, it's almost 100%. Almost 100%. So 96.2% on NQ days break either the IB high or the IB low before the close. And 90.7% when the IB is narrow relative to ATR, below 0.5 times this ATR. So below 0.5 this ATR. Then 22.6% of days break both sides. So we can say that the double break day. If you are taking the both, it's 73.6% of days commit in a single direction, your bread and butter setup. So the break rate ranged between 92.6% and 98.8% on NQ across every single year of the study. And there's no degradation over time. This isn't an edge that got carved out, it's structural. So as you can see over there, why it works, this setup. So we have this open at 9:30 a.m. to 10:30 a.m. Okay, so we have the low and the high. This is the A period, the first 30 minutes, so the first half hour, and then the B period, the next 30 minutes. And you could wonder yourself why it works so well, this initial balance. So the first point is that it's based on auction theory. Auction theory, okay? So the first hour is just price discovery, not price commitment. And the market is figuring out where value is. And commitment happens when price leaves the envelope. And this envelope is your initial balance. Then the second point is institutional flow. So large size typically enters positions during and just after the IB forms. So their fills are the fuel for the breakout. Okay, so that's why you need to ideally to get in the direction of institutional. And the last point is a trapped trader psychology. So everyone inside the IB is undecided, and everyone outside has picked a side and they defend it, and then stops above the high, stops below the low, and the break is just a liquidity event, like the hunt of liquidity, like many people are saying. And the IB isn't a magic level, it's a decision boundary. And every day, on 96 out of 100 sessions, the market crosses that boundary. And also, guys, I invite you to read everything on this page, on this website, trading stats, and initial balance breakout statistics, ES and NQ futures data 2015-2025. I invite you, there are absolutely every statistics on this initial balance, and this is just insane to see this kind of statistics about 100% of win rate, guys, if you are developing a nice trading method on it. And that's why I'm trading it almost every day, this initial balance, and that's why I'm looking closely to this indicator. And right now, how I actually trade it, this Nasdaq, this market, and with this initial balance. So right here I have this Nasdaq in a 5 minutes chart, a 5 minutes time frame, and you can see that over there this is my high B high, so initial balance high and the initial balance low, so the bottom of the first hour and the top of this first hour in a 5 minutes charts, and just right here in a 1 minute chart. Okay, so let's take a look on this 1 minute chart. So the rule number one is trade in the direction of the IB midpoint close. So when the IB closes above the own midpoint, the probability of breaking the initial balance high is significantly higher. So you just need to take the midpoint, and the midpoint is halfway, so the 50% of Fibonacci of the top and the bottom of this initial balance. So let's take a price retracement. Okay, let's draw the midpoint, horizontal line. Okay, so this is my midpoint right here. Okay, this horizontal line. We just closed right here at 10:30 a.m. and as you can see, we closed it above this midpoint. And this rule, guys, is just a single easiest directional filter you can apply. And according nqstats.com, close above mid plus low formed first means 84% high break rate by close. But then, in my opinion, you need to adapt yourself, okay? So right here, about these examples, we were in a bullish trend in daily, in 1 hour, in 5 minutes, in 1 minute. So I was expecting that to break higher. And when we are going and breaking to the upside, this 1 minute fill lines, this VWAP, so just right there, I had a perfect signal to take a long and trying to break this initial balance. So just put a target right there at the break and taking the long right there or at the break of this bull flag. This day was just perfect and really obvious to target this initial balance high. And the same at the opposite way. So when it closes below the midpoint, the initial balance low is the target, okay, just right there. This is the rule number one, okay? Then the rule number two, you just need to filter by initial balance with VS ATR. So for example, and let's take again these statistics, when we have this kind of initial balance below the half of this ATR, look at this, guys, look at this, just right here, narrow VS normal, VS wide, VS extreme, IB tier analysis. When we have a narrow run, NQ breakout, we have a 98.5% of chance to break it, guys. I don't know if you're just figuring out what I'm just saying to you, you, but almost 100% of chance to win rate. So if you're just developing a nice trading methods on these initial balance, you could win forever in your life. Then when we have a normal IBTR, so a normal one means between the half and the ATR of this initial balance. So this is just a typical day. Let's take a look again. Normal one, boom, we have 94.2% of chance to break it, this initial balance. When we have a wide one, so wide one is more than the ATR, okay, so you have the formula just right here. So bam, let's take a look. Wide one, 84% of chance to break it is initial balance. So it's still fine to play this initial balance even if we have a wide one. And an extreme one, we have only 77% of chance to break it this initial balance. So if you are developing a trading method thanks to this initial balance on wide and extreme IB days, you know that the IB often is the days range. So in these days, just skip it, and you'll break even on fake outs and lose money on chop. And now I'm showing you how to use ATR. So you just need to go on on trading view, indicator, then you go on technicals and ATR, average to range. You click on it and then you'll have it right here. Okay, this is your ATR 14 RMA, and then you can see that right now we have an ATR about 512 points. So the half of this ATR, it would be 256 points. So if we have an initial balance less than 256 points, we have almost 100% of chance that this market will break it. Either high, either the low. Rule number 3, enter on the retest and not the initial break. You want to play the break, guys, it's a bad idea. So the first poke through the IB highs or lows gets hunted, and you have to know that. So wait for price to break, then pull back, for example, just right here, okay, and retest the level as a new support or resistance. The retest entry has tighter stops and higher win rate than the breakout entry. This is rule number 3. Rule number 4, put your stop at the midpoint, then put one target at 0.5, then one of these IB range. Stop goes at the IB midpoint, tight, okay, it's tight, or opposite side. Why, for example, wider for swing style entries. Then your first target is 50%, so 50% of the IB range. Then projected from the break, okay, so just right here. And 50%, this is my IB high X1, exterior 1. This is 50%, so this is the same range than the midpoint and the IB high. So the half of this initial balance. The median extension is 55.6%, so half IB is a high probability first target. Second target, full IB range extension for the runners, okay, just in case if we have a runner. Then the rule number 5, stack with the 7289 EMA for conviction. This is my thin lines, guys, on 1 minute. And this is giving me the probable side where this market could break his initial balance. As I told you, I started my day. I knew it that we are bullish. I just needed to be patient today, waited the break of these thin lines to the upside, then to the VWAP, and then I had to find absolutely a long signal, and I got it just right here. And this is how these thin lines help me. Let's see at another example right here. Okay, perfect example. So the close of this initial balance is just right here, 10:30 a.m. Okay, right here. So we are above the VWAP, we are above the midpoint of this initial balance, and we are above the thin lines. So I just needed to find another entry point, and I suppose so just right here or even right here I had a long signal to play the break, and just on this candle we broke it. we broke it. Let's see another example. Perfect one this day. So it would be ideal to look at macro context in a daily chart, but let's see where we close. Okay, we close it just right here at this initial balance. So above this VWAP, above this 1 minute thin lines, and above the midpoint. So then you just need to find a long signal, but we had none long signal and we broke it directly to the upside, this initial balance. So for this day, it's not giving you a trade opportunity. It doesn't matter. So sometimes it's happen. So then you just need to come back the next day trying to play the same idea, the same strategic trade. Let's take a look at another example. Nice. This one is nice too. So let's see where it closes. 10:30 a.m. just on this candle. On this candle, we are closing this initial balance and we are so close about the initial balance low. So of course at this point I'm expecting that we're gonna break this initial balance low. But we are so low, it's impossible to take a short. And we are below the VWAP, below the 1 minute thin lines and below the midpoints. So this day was really hard to take a short. We broke it to the downside and then rejected it. Boom, breaking to the upside, the 1 minute thin lines, the VWAP, the midpoint, doing a nice bull flag right here. And you could take a long, and I think I took it just right here and bam. So as you can see, this day, statistically, it's taking as consideration and it enters into the double breaks on this initial balance. We broke it right here and we are just broke it right here too. And now when this setup eats you alive and we can start to talk about the double break day. It represents approximately 22% of sessions. Price breaks one side, then fails and reverses during this kind of day. And the perfect example is just right here. Usually during this double break day, the price just chop. So fail to break one side, reverse, and fail to break the other side. Just to this day, we didn't fail at the breakout of this initial balance high, but usually it's the case, okay? So that's why early warning signs, wide IB, so wide initial balance, low volume breakout, no confirmation on the follow-through candle. This is the kind of trap in this double break day, and that's why, guys, you need to be careful. And the better opportunity is before the break of this initial balance and not after. And then the other example is a no break day. I don't have any example for this video, sorry, but as you know, it's represent approximately 4% of the time of these NQ sessions, so it's almost nothing. So yeah, it's very rare but brutal, really brutal. Usually pre-FOMC, pre-NFP or light volume holidays, the market just compresses inside the IB all day and closes without commitment. And to defense against this typical day, just check the economic calendar first of all every morning, okay? And if there's a major release in the pre-market session, the IB setup is often a trap. So everyone's waiting for the data. So be careful with that. Then the third point and the last one, when this setup eats you alive, is the wide IB trap or the extreme IB trap. When the first arrow produces an abnormally wide range, so as I told you, so wide one is 1.5 the range of this ATR, and the extreme one is 1.5 the range of this ATR. Unusually large and expanded first arrow. And when it's the case, when you have a wide or extreme range, the IB boundaries have already absorbed most of the day's potential movement, and breakouts fail. Extensions are tiny. So that's why if you blindly trade this IB break, you will lose money for sure. But if you're developing something, if you are enough smart, just if you're thinking a bit with the statistics and backtesting just a bit, and if you filter for narrow IB plus midpoint aligned direction plus volume volume confirmation plus the thin lines that I showed you plus this VWAP, you've got an edge that's held up for a decade and even for life. That's it for this video. So to conclude and to recap it, the first arrow of NQ is giving you your initial balance, high and low. 96 to 98% of days we are breaking it. One side breaks, then you have to filter it by initial balance width. It's more ideal if this initial balance is narrow and not wide or extreme. Then if you want to trade outside of this initial balance, either wait for a pullback or retest and then stack it with the thin lines. So this EMA is 72 and 89. And don't trust my numbers, guys, so that's why I invite you to go on this website in Trading Stats. I can put the full study in the description, read it yourself, and that's how you actually learn to trust a setup. And if you want to make a lot of money, guys, there's the Phidias prop firm, the best prop firm in the world on futures market, which is offering you the best prop firm accounts. No one can beat them, especially with the new features on Phidias. And I'm trading every day from Monday to Friday in live stream on their YouTube channel. So if you are curious, I invite you to subscribe and watch me in live at every open on this New York session. And if you want to enjoy one account on the Phidias prop firm, let's use the FLT code at the checkout. FLT code. Let's go, baby! And of course, if you like this video and be profitable finally with this video, put a thumbs up and subscribe to this YouTube channel. A lot of educational content and entertainment content and vlog content too. I'll post it on this YouTube channel. So make sure to subscribe, activate the ring, and I'll see you in the next one. It was Florian, trader. Bye bye bye!
Yo, his name is Florian. He's the NASDAQ hustler. Every day he's grinding, making all them numbers cluster. He's a day trader, living life as a thrill seeker. Analyzing charts, he's the Wall Street sneaker. 9 to 5 ain't his game, it's the stock market flow. Tickers on his mind, watching those numbers grow. Buy low, sell high, that's the name of